All right, hello everyone. Welcome into the NinjaTrader Ecosystem webinar room. Before we get started with today's session, I'd like to take a moment to test for picture and sound. So if you can hear my voice and if you can see the projection for the intentional trader on screen, can you please enter a Y into the room? And this will just confirm that you can hear the audio and see the video. All right, getting a lot of confirmations. Thank you for confirming that. And thank you all for taking your time out of your schedule and joining us today. My name is Ryan Lai, and I work at the NinjaTrader business development team here in Denver, Colorado. Today we have a very special event for you with Tony Peterson of The Intentional Trader. The first thing that I'll start off with today is I'm just going to ask a simple poll question, and it's are you currently using NinjaTrader? This will help us get a gauge of the type of users that join our events. All right, so while you are filling out this poll question, I'm going to go ahead and show you a disclaimer on screen and read this off to you. So I'd like to mention that it's important to understand that there are substantial risks in trading commodity futures contracts, and you should carefully consider whether such trading is going to be suitable for you. And this will depend on your specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. If you have any questions, you can always inquire further by going to the link I'm posting in the screen here to our risk disclosure. You can ask for more information by writing into brokerage support at ninjatrader.com or brokerage sales at ninjatrader.com. You can also request a CFTC full risk disclosure. And also, please remember that these training webinars are not a solicitation nor a recommendation for any services, but they're simply educational in nature. And another disclaimer is that this presentation is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have any brokerage-related questions, we would ask you to direct them to the NinjaTrader brokerage directly. There's a phone number here, which is 312-262-1289. You can also email brokerage-sales at ninjatrader.com. All right, now thank you all for filling out that poll. It looks like in the lead we have lifetime license key holders in the room. Next, we have free license key holders in the room. And there are a few people in the room that are currently not yet using NinjaTrader. So I'd just like to let you know that NinjaTrader is a free charting platform for advanced charting, market analytics, automated strategy development. You can connect to a live data provider, and you can also use it for simulated trading on live data. We only charge for the product if and when you decide to trade live through any of our supported brokers. And if you haven't done so yet, I'd like to invite you to download a copy of NinjaTrader for free. This copy of NinjaTrader can be used for as long as you'd like while you get to learn the software. And then once you're ready to purchase or release a live license key to trade a live account, you can take a look at our purchase page here. All right, so with that being said, we are very excited for this unique event in which Tony Peterson will share his perspective on the markets that will revolutionize your approach to trading. Thank you again for your attendance today. And without further ado, it is my pleasure to welcome into the NinjaTrader webinar room, Tony Peterson. Go ahead and take it away, Tony.
All right. Well, thank you, Ryan. I want to thank everybody at NinjaTrader and all of you for coming today. You know, one of the things that Ryan was talking about is something that's like one of the best kept secrets out there, and we try to just tell everybody we can that NinjaTrader is free. And so I'm listening to Ryan tell people, and it seems to escape a lot of people. You know, they contact us all the time and they say, well, I use a different platform. How can I use your indicators? And we're like, why would you not want to use a free platform to use our indicators? It's free. NinjaTrader is free. All you do is provide data for charting and a whole bunch of other tools. So it's something that we really think a lot of people need to know more about. It seems to be a well-kept secret, even though they plaster it everywhere. Nobody really believes that free is free. But honestly, it is. You can use the free version and everything that we do on that. Okay? So anyway, if you're going to trade with it, you absolutely need to have the live version. But other than that, there's lots of things that you can do with it. So anyway, here's the deal. I'm going to cover up the chat. I know that you guys are going to have some questions. I tend to not answer questions during the event because I can get off track, get off topic. So I cover up the chat. Feel free though to ask questions. At the end, I will try to take some time to answer a few questions. We are having another event. We'll get to that in just a minute, where I'll have actually more time to answer your questions for you. So this event is called Just a Tick Away, and sometimes we call it 2 Ticks to Paradise. You know, we have a few different names that we'll call it, but it's basically the same idea that we're trying to get across to people to help them kind of shift the way they maybe have been trying to think about trading over time. Okay, so a little bit about me. I started the way many of you started trading, and I had a full-time job. I knew nothing about trading. I had no experience or background in anything financial. I was a remodeling contractor. One of my customers got me interested in trading, and then I thought, oh, this is really cool. I can do this very easy, and then I don't have, this very easy thing, this trading thing that should be very easy, and then I don't have to work so hard. So I thought, a few months and I'll be good to go. But as we all know, that doesn't really work out that well, does it? So ultimately, though, something really big happened, and then I've been a professional trader for over 9 years, and subsequently became a trading educator. I developed a trading system so that I could help teach what I had learned to some friends, and then that just kind of grew and grew, and now here we are. So this event that we're talking about, we're going to have another event on Saturday. I'm going to take everything that I talk about today, and then we're going to show you how to apply it. Okay, and that's what we're going to do on Saturday. That link that you see right there in blue is clickable. Anything that you see in blue underlined on my charts is clickable, including the links on the left side. You'll see a link for Connor, and you'll see a link for Lisa. If you have questions or want to request more information at any time, click on those links. They are live links on the slide, and they'll open up your email host, and you can send them an email, or go ahead and register for our event this Saturday. Okay, it's at 11 a.m. Eastern U.S. time. We're going to talk more about, we're going to expand on on this notion that we're going to talk about today. So most of us get into trading, and we have these expectations of trading, and we believe, based on what we've seen, that we know what trading is. Now, doesn't mean that we all have the exact same idea. So you might think that trading is mostly mechanical. This is what my experience says, that most people believe that all you need is technical indicators. You need the numbers, you need the charts, you need to know when to push the button. So most of us come into trading believing that trading is mostly mechanical, or even more so a science, that we can just apply algorithms to the data to be successful. Some people believe that it's an art form. Certainly back in the day of the pit traders, a lot of art involved in reading and understanding what was going on around you. A lot of people believe that it's a very mentally challenging type of endeavor, or that trading is mostly about managing your emotions. Or I get a lot of this, that people ask me what I do for a living. I say I'm a day trader, or I'm a futures trader, and they go, oh wow, you must be really smart. So there's a perception out there that you've got to be particularly smart to be a trader. So we all have these different expectations. We certainly know that it's unlike anything else out there. I'm going to ask you to kind of change your perspective a little bit, though. You are all sitting there with a certain perspective on trading, a certain understanding of what you believe trading is, right? And you may be listening to me going, he can't tell me anything, I already know what it is. But I can promise you, if you allow yourself for a few minutes to have an open mind, you might start thinking about this endeavor, this trading thing you're trying to do successfully a little bit differently. So I'm asking you to adjust your perspective, just like what you see here. You know, we think we all know what we're seeing, but sometimes it's not actually what we believe it is. You know, the picture in front of us is not actually what we think it is, because we can see certain things, but in reality that perspective has been skewed based on unrealistic assumptions and expectations. Okay? So we're going to talk about what we do here a little bit later, and what we do in our trade room. We're looking for a confluence of technical analysis indicators to give us an edge. Okay? That's all. We trade pullback trades, pullback from a trend. We're looking for an edge. So we're reading momentum, we're reading velocity, we're looking for things to be overbought and oversold. You'll notice that exhaustion and the potential for exhaustion is very important to us. We want to know when price is being manipulated. We can tell when price has been manipulated, or when it increases suddenly, when the rate of sales going through increases suddenly. That typically creates a reaction. So what we're looking for is a reaction. Okay, the pullback alert is reading the flow of orders going that have been processed. We're looking for divergence signals that tell us when momentum has shifted. And then we're looking at support and resistance to help us understand where price might find a level that it can't break through. Okay, so rather than developing a trading system on any one of these type of technical analysis processes that are out there, we've actually combined them all into a single process. We take a lot of different data from different sources, combine them together, and when they all suggest the exact same thing, then we have a confluence of events in the market, and that gives us a huge edge. Okay? All right. Most of us have experienced the emotional roller coaster of trading, including myself. As I said, I struggled for 7 years. You may be wondering why I'm talking about this one tick thing. This one tick thing that I'm talking about is because of the emotions of trying to be a trend trader. You know, trying to, being excited when you get into a trade and being very hopeful and wishing. And then you get to a point where you're starting to wonder, do I get out of this trade? What do I do now? I'm ahead. I could cash out and I could make a bunch of money, but I should stay in because I might make more money. Or price starts going down and you want to cut your losses, or it's dropping way below your entry price, and you don't know whether to hang with it. What's the right thing to do? You start getting angry. You start getting upset. You start getting excited. You then decide, I've had enough. And you bail out, and of course, if you don't, you're going to get stopped out. If you do, price is going to hit your target, right? So we've all been through this emotional roller coaster of trading. It occurred to me now, after 7 years of struggling and finally making it through to the other side, there were some things that nobody told me. One of those things that I never heard from anybody that I was looking to for advice was that it is highly unlikely for me, who I was a small single lot trader or small contract trader, trying to learn this trading thing. Of course, you have to start small, right? You can't just start trading with 10 contracts when you don't even know what you're doing. So you have to start small. But they're telling me I'm supposed to be a trend follower and I'm supposed to get 50 ticks a trade or 100 ticks a trade or whatever. Nobody told me that that's nearly impossible. Statistically, if you have emotions, you will fail at overcoming those emotions in order to be a trend trader with a single or small lot contract. Okay? Statistically, you will not succeed in overcoming your emotions. Nobody ever told me that. I kept trying it over and over and over again. So I just woke up one day and I said, you know what? I'm either going to quit or I've got to just stop this emotional roller coaster that I'm on. But beyond that, I started thinking, you know what? How long would I have to worry about my emotions if I really only wanted to get a couple of ticks and call it a winning trade? Okay? So I started thinking about that. Now, of course, I know almost all of you are sitting there going, okay, yeah, right, whatever. What does 2 ticks get you? What's the whole point of 2 ticks? You can't make any money that way. Now, I know there's no system out there that's going to guarantee you anything. Okay, so you have to understand that this is an exercise. What I was looking for is to be a consistent trader. Could I consistently end each day as a winner? If that's just 1 tick, fine. But you're wondering why would I bother? You can't get anything with just 2 ticks a day. A hot dog and a Coke maybe, or ice cream or whatever. But you know what you're doing? The point is, this is an exercise to build confidence so that you understand that you can be a winning trader. If you could put together 10 days in a row of being a winning trader, you've now taught yourself you can do this trading thing and you can do it successfully. This is the basis of our mentoring program. We have a program called the Trader RX Mentoring Program. We do one-on-one mentoring. And the basis of that program is to strip away everything you think you know and then start from the bottom and start building confidence. All right? The most dangerous thing to have when you come into trading is expectations. That you have this expectation that you're going to quit your job, that you're going to build a retirement account, that you're going to live the good life, go on more cruises, go on more vacations, spend more time with family. That is a very dangerous thing to come into trading with. Most of us have come into trading with these types of expectations, but we find out the results are somewhat opposite of that. This was my expectation. This was my 3 to 6 month plan. I knew it was going to take me 3 to 6 months to master this trading thing. I figured 6 months if I was really slow, and I took my time. And basically, this was my master plan. I would learn how to trade was the first thing. Then once I knew how to trade, I'd just make lots of money, quit my job or my business, and just live the good life. And that's why I got into trading. This was my plan. All I had to do was get past step number 1. I didn't even write this down, obviously. This was all in my head. This is the way I approached trading. I think many of you might see yourself in some of this. First, I got to learn it. Then I'll worry about a trade plan. Then I'll worry about all the rest of stuff that comes afterwards. But I got to learn it first. Okay? So we come into trading and we listen to somebody. We're at a webinar and he shows us a chart like this and he says, okay, well, I'm going to teach you how to buy low and then sell high, and you're going to make a lot of money and you're going to be very happy, and it's just an easy life, and you go, man, that looks simple. I can learn that. That's no problem. So let's do a quick analogy. We watch golf on TV. We see that looks like the good. Wouldn't that be fun to make a living just out there in nature, people cheering for you, the big crowds, and oh, it'd be so much fun. And you watch that on TV and you think, well, hell, that looks easy enough. I ought to be able to do that. All I need is the same golf clubs that guy on TV is using. And I want to look the part, so I'm gonna buy a shirt like the guy on TV is wearing, and then I'll go watch the YouTube videos that the guy on TV has published, and that's pretty much all I need, right? So with those three things, I can shoot. Why can't I be a pro golfer? I think I'll do that for a living. So you go get your golf clubs and you go out and you throw the ball on the ground and you decide, I remember how this guy did it on TV. He hauled off and whacked the hell out of that ball. And it went way down the fairway. I'm going to do it just like that. So you stand up and you go out at it and you whack at the ball, and suddenly the repercussions of having unrealistic expectations start to set in. You can't do what that guy does, even though you have all the same tools, all the same opportunities. So this is typically how we start our trading, right? And then of course we want to start placing blame. Oh, the guy in the video was just trying to get my money, or this system doesn't work, or those indicators don't work, or this instrument, the markets are against me, or I just have really bad luck, or I wasn't born to be a trader. Okay, all these excuses. What it boils down to is you don't even know the basics. And there are basics. So in golf, what do you need? You need to learn to hit it straight and short and gain confidence. Just a little chip shot and hit it straight and do it over and over and over again. You build that muscle memory. Excuse me. And you hit it 50 yards. And you get it to where you can hit it 50 yards perfectly straight every time. And then you hit it 60 yards and 70 yards. And so what happens? You start gaining confidence in your abilities. You start getting muscle memory. You start getting experience. You start having a better understanding of what it is that you're trying to accomplish. Okay? So you just do the same things. You do something small. You do it over and over and over again. And that's how you get good at something. This guy doesn't even know if he can hit the ball straight yet, or hit it off the ground. But he's trying to kill it. All right, so now let's go back to this 2 ticks away, just 2 ticks away. Okay? Here's what I want you to do. This is a challenge. Start with the basics of a trading system, a very simple trading system. Win 2 ticks a day net for your trading session. Okay? So let's say you take your first trade and you lose 5 ticks. You take your next trade and you win 5 ticks. You're at 0. Next trade you win 2 ticks. Done. You're done for the day. All right? So you want to net 2 ticks. You quit trading live. And you say, and you mark it on your calendar, boom, I quit today as a winning trader. Now you want to see how many days in a row, how many consecutive days you can end the trading session as a winner. Or you can do it by month. Now, when you hit your goal, say your goal is I want to do it 10 days in a row of 2 ticks. If I can win 10 days in a row of 2 ticks, I've convinced myself I can do this trading thing. Now go for 3 ticks and do it again. This is conditioning. This is teaching yourself that you know how to be a winning trader. Okay? Eventually, you'll be able to work up to a few more contracts. So maybe you go for 5 ticks, which is my target. And then that's my comfort zone of 5 ticks. And as I get better and better and my account grows slowly and steadily, I'll increase contracts. But keep doing the same thing over and over and over again. All right, so basic trading system. This is our bunt trading. This is a very basic trading system, although it's extremely powerful. On this chart here, there's 1, 2, 3, 4 trade setups. There's a trade setup right there. At the open of the bar with the lightning bolt on it, that's where I put on a trade. How about a red dot? You see a red dot? Okay. Yeah, I guess I don't know why the arrow doesn't work. Okay. So price is dropping here. I have a confluence of indicators. At the open of this bar, I put on a trade. All right? So there's my little winner right there. And I'll teach you how to do all this on Saturday. Open of this bar right here, put on a buy order. Open of this bar right here, I put on a buy order. Okay, see this confluence of indicators? As I was telling you, there's all these different indicators. We have momentum. We have a strong push leading to exhaustion, an overbought condition, and then boom, price drops. There's a lot more going on here, and I'll talk about that in a few minutes. There's another one. Open of this bar is where I sold it, right here. This is a very basic, simple, but powerful trading system. So how many ticks do you really need? This is generally one of the most popular slides, even though I'm trying to tell you that thinking about money and thinking about how much you can make is an expectation that you should not be dreaming about until you get to a point where you can consistently be a winning trader. All right? But everybody wants to know, well, how much money can I make? You know, what do you want to make? How hard are you going to work at it? We want to get in and out of the markets as fast as possible. We want small targets. The big money wants us to stay in the markets for a long time. Why? Have you sat and watched the markets? Have you seen these crazy radical moves that happen out of nowhere? That's the big money. The longer you're trading, the longer you're in the markets, the longer your money is exposed, the more aggressive the trade. All right? You say, well, no, trend trading is not aggressive. No, they say being in a trend is because a trend is likely to continue. The longer your money is exposed, the riskier the trade. As long as your money is in the market, you have higher risk. So I like my monies to be out of the market as much as possible. All right. So here's a faulty assumption that most of us have come into trading with, or many of us anyway, and that is that we think that trading is all about numbers. I'm good at numbers, so I'll be good at trading. Makes sense? Seems like everything about trading is about numbers. So we have all of these very complex and complicated algorithms that have been developed by very smart people, and I look up to, and most of us look up to very smart people, and we believe, well, because they're very smart, they know what they're doing. We don't even think to ask them, what is it that you're measuring? Why are you measuring all these things? What is it? Can you tell me? I know you guys could probably list all these different data points that are being measured. But all of these data points are simply trying to help us understand people's feelings and emotions about price. That's all they do. All of these very complicated algorithms, these very powerful indicators, these very confusing trading systems are only trying to understand people's feelings and emotions. So most of you know who Richard Wyckoff is. He very prolific trader back in the turn of the last century. He actually wrote, he had a magazine that he published, and you know, he has some really interesting things to say. If you have a chance to read up on Richard Wyckoff, it's very fascinating. But we think we're studying the market, right, when we're staring at charts. But all we're doing is studying what people think about the market at any point in time. That's it. Thoughts, feelings, and perceptions about price. Okay? So as I'm trying to either decide I'm going to quit trading because I had lost about all the money I could, or I was going to try something else. And so I did. I decided, you know what, I'm just going to look at a chart with no indicators on it. I'm going to see if I can figure out, by looking at this chart, if I can figure out what people are thinking. Now, there's a lot of people in the markets, right? And you can't see them. So all we have to go by is how they're acting. But on any given day, how many thoughts, feelings, and emotions are there likely to be, or combinations of thoughts, feelings, and emotions are there likely to be in the markets? Millions at any point in time. So how am I going to quantify, or at least find an edge, when there are millions of opportunities to try to determine what most people are thinking at that time? Well, now here's another picture of a group of people. Could be a much larger group, but still it's a group of people that, if I look at that picture, how many thoughts, feelings, and emotions? You know, probably not many. Fear of injury, maybe. Protect from harm. I know what they did next. I don't have video of this, but because I watch people and I understand what people, how they think and what they do, particularly when something sudden and unexpected like this happens, I know exactly what happened after this. That's an edge. I don't need a crystal ball. I don't need anything. I just need to know how people usually react to something like this. So what's going to happen after the danger passes? All of their hands are going to go down. Ugh, amazing. It's like I had a crystal ball, right? That's what we're looking at with what we do with our trading. We know that people are going to react when something sudden and unexpected happens. So what am I going to do? Am I going to read complex algorithms, or am I going to people watch and try to understand thoughts, feelings, and emotions? That's a lot easier for me. I don't know anything about algorithms. I'm not that smart. But I understand how people act and react. So rather than just following the herd, which was what I had been doing for so long, I decided to think about this thing on my own. And I started thinking about, okay, so looking at this chart, what is this chart? Where can I find something on this chart where something drastic happened? Something obviously drastic happened on this chart. And how can I find out why price just suddenly stopped and turned? So I start measuring what's going on in the markets just before price stops and turns. And as I start looking, I start noticing more and more data points where I can find out and figure out when price, what is coming into the markets just seconds before price stops and goes the other way. And it doesn't have to go very far the other way. Just goes the other way. That's an edge, knowing what's about to happen next, right? So again, we looked at that chart where, you were going to buy low and sell high, and you were supposed to ride through all of those emotions. Well, for me, I'm going to find much better and more accurate information that these little pullbacks are going to happen than when to know exactly when to get in and when to get out on a trend. So that's what we've done. We pick up where these pullbacks happen. And this was a big aha. Now I have this new perspective that on trading and a more clear direction and understanding of what it was I was trying to accomplish. This was a huge aha moment for me. And having an aha moment like that opens the door for all kinds of new aha moments. Suddenly there are things available to you that you didn't even know was there because you didn't allow yourself to think beyond some of the old conventional wisdom. So rather than trying to anticipate what this crowd is going to do, I'm going to anticipate what a group's going to do immediately after a sudden and unexpected event. So when you see a chart that looks like this, I see a crowd reacting to a sudden and unexpected stimulus. And I know what they're likely to do next. Okay? So you can look at a chart like this. I'm going to see a chart like this, where I have indications that something sudden and unexpected is going to cause a reaction. Every time I see that, we print an indicator on the chart that says, look, here's a condition that exists that typically causes price to stop and turn. Okay? So we're going to want to see a confluence of those events. Now, we don't know how far things are going to go. Okay? So we have relatively small targets and relatively small stops because we want to get in and out of the markets as quickly as we can. We want to exercise our edge. This is what we call our sweet spot. And put our money back in our trading account and wait for the next setup. Okay? We want to be out of the markets, relaxed, less stressed, less excited, dare I say, much more boring. So what we're looking for is, first of all, trends never run in one direction, right? They never move in one direction. Trends will push and pull back and push and pull back and push and pull back, right? Trends never run in one direction. The harder the push, the more likely the pullback is about to happen because price will always get exhausted. All right, so we read momentum. We want to see price pushing hard and fast in one direction. Then we want to see it suddenly burst, okay? When you see a move, an up move like this, and then a sudden burst, price is going to get exhausted. It is going to pull back. Then we see a momentum change. Okay, so we're actually, price is moving up, but we're reading that momentum has actually shifted directions. I'll talk about that, how we know that on Saturday. So now what I see is a sudden and unexpected event, and I know what's likely going to happen next. So we're looking at the study of responses, right? That's really what we do. People want to call us counter trend traders or whatever. But what we're doing is we're paying very close attention to where the big money is manipulating the markets, and they do it to us every day. They've studied our responses, and they create these events to cause us to respond predictably. Okay? And it's so funny to hear people complaining about HFTs and the unfair advantage that they have. I love it. I love it. As soon as I see these HFTs fire off, I know I need to get ready for my opportunity. Okay? So we see that these HFTs have many ways of manipulating the market, and this is a very quick illustration, a very simplified illustration of what they're doing to us, okay? So down here, they're accumulating. We think nothing's happening, okay? So they're very slowly, quietly, stealthily. They don't want people to know what they're doing. They're buying up the available assets at a cheap price. Then by manipulation, they bump it up and they buy up some more maybe, and then it gets bumped up again. Then they start selling all, they bought down here, they started selling in here. Again, they're doing it very quietly. We're getting bored out of our mind because nothing's happening. Price is going sideways, and we're just waiting. Okay? So they're making all their money here. Not here. Not here. Here. This is where they're making all their money. So everybody that thinks that they're doing stop hunting to go out and take our stops out, they don't care about our stops. They couldn't care less. They've already made their money. If you think they're stop hunting, all they're doing is manipulating markets so that they can, again, set it up so they can do this to us again. Okay? So they're going to finalize this last big push. Even though they've made all their money here, they still control the larger portion of the available contracts. So then they push price up again, and then all of a sudden they dump everything they own on the markets. Well, what happens? The supply overwhelms the demand, which drives down the price. Okay? Simple supply and demand. Happens all the time, over and over and over again. This is what we're taking advantage of, because every time they run up price like this, it drops a little bit. Then they run it up and it drops a little bit. They run it up hard and it drops hard. Okay? So we're taking advantage of all of these manipulations that are going on. Okay? These upthrust bars are almost always followed by a small retracement or pullback or a full-on reversal. All right? So we use volume spread analysis to read the basically it's like reading the price action inside of a bar. You can look at a bar, and these are just two bars, and they look exactly the same if you're looking at static charts, but they're actually very different. And when you have the orders coming in where there's a lot of buying and selling going on at one particular part of the or in the life of the bar, you could anticipate that the buyers were in charge, and then the sellers, price got to a certain point where the sellers are now very interested, and the buyers and sellers are kind of overlapping here. You get this churning. Well, we're also expecting exhaustion to set in. So the buyers are actually getting weak. The sellers are getting strong. So we're reading where these churn bars are happening. All right, and that's our pullback alert. All right, just one more measurement that we're taking. On the current bar, these indicators print on the current bar or at the open of the current bar to tell us what's going on in that bar and what to expect afterwards. Okay? So that we've taken a very complex technical analysis system or style, and we put it only where you need to see it. I've seen volume spread analysis systems where, man, it takes you a month to learn how to do it, and you've got all kinds of lines and squiggles and all this stuff on your charts to try to understand what's going on. We only want to know, I don't want all those lines, I just want to know when a condition exists where I can anticipate what's likely to happen next. Okay? So here's a very basic setup. It looks just like what I just showed you on the videos, right? A pullback occurs when we have this confluence of events, and we use these supports, this major line of support and this minor line of support, which is the low of the day, to build a set of rules to tell us when it's time to enter a trade. This is a very simple but powerful basic trading system. So we have all of these are now developed and running on NinjaTrader 8. We have the speed tick indicator, which helps us understand when the big boys are manipulating the markets. We have our Flash and McDiver to help us understand when we have a divergent condition, meaning that even though price is moving one way, momentum has actually shifted and is headed the other way. And when that happens, price will almost always follow momentum. Talk about this more on Saturday. If you've got any questions about Saturday, click on the email address on the left, either Connor or Lisa, and they'll get you more information. We'll also get to a slide where you can just register for it. So rather than, a lot of people try to read divergence with indicators that look like this. We've removed the oscillator at the bottom, and we just tell you that at this bar, we have a divergent condition, and you can expect price to probably do something specific. All right? Same with our ricochet. We're looking at relative sales flow, meaning that sales have been flowing through the markets at a relatively steady pace, and all of a sudden, bam, they come in really fast. When that happens, people react. When people react, then that gives us an opportunity. Okay? Same with our velocity indicator. We're just trying to read exhaustion. We're looking for major areas of support and resistance. Again, all of this is running on NinjaTrader 8. Many of you use overbought and oversold, but you're going to put an oscillator at the bottom of your screen. We don't even use those. We just put it right where your eyes are. We have what's called heads-up display indicators. Everything you need to know is right in front of you. I don't look at any other charts. Okay? So now you see the imminent exhaustion, the ways that we're measuring to see when exhaustion is setting in. We're reading where the markets are most likely being manipulated by the big boys, electronically, that they have the ability to place orders so much faster than we do. We're looking for a sudden increase in order flow. We're looking for a certain type of buying and selling going on inside of a bar. We're looking for a change in momentum, and we're looking for support and resistance. You put all that together, it's a very basic, powerful trading system, and it's a step-by-step approach to qualifying the trades. Now, I want you to take the 2-tick-a-day challenge, and whether you use our trading system or somebody else's, where you feel strongly that you can get 2 ticks a day, take the challenge, all right? So you want to trade for a 2-tick winner. You want to stop trading live. You're going to continue trading, but practicing in sim. But those trades don't count anymore towards your daily goal. Okay? So once you hit your 2-tick winner, you're going to mark it on your calendar. Boom. I ended the day as a winning trader. Anything that happens after this doesn't count towards that. Okay? Record how many successive days or how many days in a month you can do that. And then tell me if you don't suddenly feel full of confidence that you never had before. If you can stop thinking about, oh, well, I can't make any money at that. Understand that this is an exercise to change your perspective and gives you a platform from which to build your trading career, basically, from which to build your trading skills, from which to build your account slowly and steadily. All right? And then you just start increasing the lots traded. What I did is I set a goal for $2,500. When my account grew $2,500, I added one contract to my trade. That was my approach. So that it grew another $2,500, I added another contract to my trade. Okay? I want you to take this 2-tick challenge and tell me if it doesn't, even just for a few days, tell me if it doesn't change how you approach trading. Okay? Now, we've got a lot of, you can listen to me all day long, and I understand that, you have to take what anybody says in a webinar or on a video with a grain of salt. We have dozens of traders that are happy to talk with you. We have videos on our website. There's just a few of them. Just go to our website and you can see all these videos of what other people think about this system that we have. Here's the slide to register for our event this Saturday, where I'm going to go into more detail about developing this habit of winning. You know, we had to go through it kind of quickly today. Developing this habit of winning, this expectation of winning, okay? I know all of you want to be winning traders. We all want to be. But when we sit down to trade, what's our expectation? Think about that. And we'll talk more about that on Saturday. All right, so we do have a special for y'all for coming today. All of the indicators that we talked about, the speed tick, the ricochet, the flash, our support and resistance, the pullback alert, our overbought, oversold indicator, the McDiver, which is another divergence indicator, our momentum indicator, our velocity indicator. And we had one that we didn't talk about today, and that's our super divergence indicator. We're going to talk more about that on Saturday. Ordinarily, we have a bundle package for $35.65 that includes 1 month in the trade room. If you want to have a one-on-one session with me, if you have some issues you want to talk about, or you want to tell me about the struggles that you're having, I'll be happy to have a session with you. We have a tech support guy that can do remote installation if you're uncomfortable doing it. We actually have a really nice installer program that actually does everything for you. But a lot of people are uncomfortable with that, so we handle that for you. And then we give you a free month of our Fast Forward training program, which is actually going to teach you how to practice everything that we teach, okay? So teaching is really only a very small part of what we do, okay? And you're not going to really learn that much from hearing me tell you things. You're going to learn by doing. Well, there's only a certain number of opportunities in a trading day for that. We're going to teach you how to maximize your opportunities. So we're going to do all of that for only $17.70. Okay, so that's like way over 50% off. If you're ready to do that, go ahead to our current specials page. I don't know if somebody can put that in there. And go ahead and take advantage of it. If you've got questions, you can contact Lisa. I think I covered up Connor's email. But you can just click on this, send Lisa an email, and we'll get you all the information that you need to help raise your confidence level that this is a good investment in your trading career. Okay? If you want to talk to some of our other traders, we have a huge list of happy traders that would love to talk to you or interact with you via email or whatever. You don't have to just take my word for it. We've been doing this a very long time. We're one of the we've licensed more NinjaTrader indicators than almost anybody else out there, and we've done that for a reason. We've been here a long time. We do the same thing over and over, and we plan on being here a lot longer. So I've gotten right to, how about that for timing? I got right to within 20 seconds, and I'm done. How's that, Ryan? If you have any question for me, feel free to email. And Steve just asked, do you have any performance records available? Performance record for whom? Everybody, these are tools. Our indicators are tools. So it's up to you to learn how. This is a trading system that provides you tools. This is not an auto trader, Steve. That's an expectation that a lot of people don't understand. The indicators are tools to help you make good decisions. The more you practice with these tools, the more you use these tools, the more experience you get, the better you're going to be. So the tools have zero record. That's an assumption and expectation that a lot of people have. I use the analogy of buying a saw at Home Depot, and handing it to somebody, and you go, well, what's my expectation of what this saw can do? I need to go trim that house over there. How do I know this saw is going to be able to trim that house? Well, if you've never used that saw before, it's probably going to look terrible. So you got to take the best tools you can, use them, learn how to use them, understand what they're capable of, and then develop your own set of risk tolerance levels for using them. Okay, we have a very defined set of rules that we trade within, but within that very defined set of rules, you have some room to tune it to your own risk tolerance levels, and we'll talk more about that on Saturday also. All right, I've run completely out of time. Ryan, thank you very much. Everybody, thanks for coming. And I hope you all signed up for Saturday. We've got a lot more to talk about. We're going to get into it a lot deeper on Saturday. Everybody have a great evening.
All right, and this is Ryan from NinjaTrader Ecosystem jumping back on the line here. So to close out here, I'd like to give a special thank you to Tony Peterson of the Intentional Trader for today's great presentation. The NinjaTrader Ecosystem is always pleased to sponsor these weekly vendor events as a value-added service for all of our clients. So if you find value in these events, we would hope that you would attend them on a regular basis. And we would like to remind you that the information provided in this presentation today was that of the Intentional Trader and not of the NinjaTrader Group. All information presented was for educational purposes and should not be considered as trading advice. If you're interested in joining these events in the future, I'm providing a link in the room where you can take a look at our schedule. Again, we appreciate the time that you spent with us today. We hope you enjoy the rest of your day and night, and we'd hope to see you in our future webinars. Happy trading from everyone here at NinjaTrader.